Question 4. Sorry, 4A.
The machine grinding company commenced business on 1st January year 1 with capital of 80,000 contributed by
In
the
the
owner.
background. Okay.
Hello?
Continue reading.
The company immediately paid cash for grinding machine costing 80,000. It was estimated to have a useful life of 6 years, and at the end of that time was expected to have a residual value of 8,000. During each year of the operation of the machine, the company collected
You can continue reading.
in cash from customers for the provision of grinding services and paid 23,000 in cash for wages and accidental running costs. Required, prepare spreadsheet for each of the 3 years of operation, analyzing transactions. Hello?
Yes, I can hear you.
Okay, yeah, because your voice was cutting a bit. I hope it's clear now.
Yeah. How is it now?
Yeah, it's fine.
Okay, continue. I'm able to hear you.
Okay, prepare spreadsheets for each of the first 3 years of operation, analyzing the transactions and events of the company.
Okay, so you need to prepare a spreadsheet for each of the of the 3 years, right?
Yeah.
So the company has the capital of 80,000 that has been contributed by the owner, right?
Okay.
These are key things that you need to get. So the company decides to buy a machine, 80,000 pounds. Now it is estimated that the useful life of this is actually 6 years. And at the end of the time, the machine is expected to be resold at the value of 8,000 pounds. So during each year, the operation of the machine, the company collected 60,000 in cash from the customers of the provisions of grinding services. So this is more like some revenue we got from the services of the machine, right?
Yeah.
And at the same time, we have incurred expenses worth 23,000. Yeah, these were for wages and for incidental running costs. So these are the key elements that we have identified in the question. So we need to prepare the spreadsheet for how many years? For 3 years, for each of the three what? 3 years.
3 years,
Okay.
yeah.
So first of all, we need to calculate for depreciation. In this case, using the straight line method. Let's calculate for what? Okay, I'm asking for less than a minute.
Okay.
Are you able to hear me now?
Yes, sir. I can hear you.
Okay. Okay. So we need to prepare a spreadsheet for 3 years. So we have to start with the first year. Okay. I said that the first thing that we need to do is to calculate for depreciation using a straight line method of the machine. We are dealing with the machine. A machine depreciates because it's a non-current asset. So for depreciation, it will be the costs. I'm assuming you still remember what you did last time, isn't it? The cost minus the resale value. 80,000 divided by what? By 6 years.
That's
right.
the straight line method, yeah?
Yeah.
80,000.
Right. Okay. So how much is depreciation per year?
Just a minute.
Hello?
Yeah. 80,000 minus. So that's 8,000, yeah?
Yes, 80,000 minus 80,000, the resale value.
Divided by 8. Divided by 6,
Yeah.
sorry.
Yes,
That's 12,000.
that is 12,000. So this is the depreciation per what? Per annum. So is now to calculate, to show the spreadsheet. And our spreadsheet will follow this format.
The same format that you did?
It is the same format. You know about the format, right?
Yeah, so it's like end of year, depreciation of year, and then total depreciation, and then net book value.
Exactly. So let me just do this. Let me just let me on this part present some of the solutions that we may move a bit quicker on this part. Okay.
Okay.
I'm sure you are still able to follow.
Mhm.
You are still able to follow on this part so that we don't. Am I sharing the screen? No, I should share the document. Yes. So that's what is there. So see now what happens. This is what happens. We're on question number what's this? Number 4. Number 4A. Okay. So during the first year, what happens during the first year? We have already calculated for depreciation. Is that right?
Yes.
Yes, we have already calculated for depreciation. I just need to explain the answers so that you may understand them properly, how they were being.
Yeah, that's better.
Yeah. So you are given.
Each year it's going to be different for the 3 years.
Yes, each year it will be different because
Okay.
the question said for each year, for each of the 3 years. That is what the question said.
Okay.
Okay. So you start for the year number 1. The first year, the owner's contribution was what? How much did the owner contribute? It was in form of cash. He contributed 80,000.
Yes.
You're following?
Yeah, it was.
Then there was the purchase of the non-current asset. So this is the cost of the non-current asset. So basically the format to be understood, first of all, the name of the transaction, then you put the non-current asset at cost, then you have accumulated depreciation of that non-current asset, then you have cash, the cash that has been put into that asset, then you have the owner's interest. Under the owner's interest, you have got the capital that has been contributed, and then we have the revenue part, the profit part, which is revenue minus expenses. So let's start with the first one. So you see that the owner contributed how much?
80,000.
80,000. Right. That is the total amount that the owner contributed. And now if the owner contributed this in terms of cash, obviously this same one will be what? Will be capital, because it's capital that he contributed. So you put the same one as capital. He contributed in form of cash. That's why we are recording the same amount both on cash and what? And the capital contribution. You're following, right?
Yes.
Yes. So if he had contributed.
Sir, just a minute. I need to close the window. There's so much noise. Just a minute.
Okay, so.
Okay, done.
We proceed.
Yes, sorry.
Yeah, no, it's okay. So there was the 2,000 is cash. He invested this money in form of what? Cash. That's why we are writing 80,000 cash. And then the capital that was contributed was what? 80,000. This same cash, it was capital. So that's why we're recording what? 80,000 capital here.
Yes.
Okay. It is not revenue yet. That's not revenue. We have spent this money as a business. So now on 1st January, we purchased the machine. That is the order. Actually, this is the same format that is given in your notes. I went through even the notes, you know?
Okay.
Yes. So this is just the format. You write the purchasing value of the machine here, which is the machine cost or the non-current asset. It can be any other non-current asset. It can be fixtures. Okay. It can be equipments. Right.
Okay.
So just have to understand that it is the cost of the non-current asset. In case we change the name of the current asset, it gets not to be the machine. Then from there, depreciation. This is the very first year. Okay.
Okay.
There is no accumulated depreciation from the previous period, because this accumulated depreciation, we're showing the one from the previous period. So like it has not yet, this is the very first year, you understand? So it's the
Yes.
very first year. So we don't have the accumulated depreciation from the previous period. And then this same amount now, we are going to record it as an expense in cash account, isn't it? When you purchase the machine,
Okay.
are you following what happened? First, the person introduces into the business capital 80,000, right?
Yeah, and then he takes it out by
So which means the capital account has been exactly, the capital account has been debited by that amount. Okay, which means that in our business, our bank account has what? 80,000. Then we use the 80,000 now to buy what? We buy the machine, right? Yes. So we bought this machine using the same cash. So that's why we are deducting from cash the 80,000.
80,000.
You're following? We're deducting this 80,000 from the cash account. The reason why this is a negative entry is because we are using the cash account, the cash, to buy this machine. You're following?
Yeah, it has been deducted because you bought the
So now then the next
one,
exactly. So now all year you collected cash from customers.
Yes.
How much cash did you collect from customers from this machine? We collected 60,000. That is given in the question we read about that. Yes, that's the total sales that we got from the same. So this same one, the sales at equal to revenue. That's revenue. That will be our revenue.
Yeah,
you're following? That will be our revenue. Yes. So that's how you enter. We enter it to the cash account because these customers, they gave us cash. It's not a credit sale. They gave us cash, and that same cash will sit also on the other side, the credit side, as what? As revenue.
Okay.
Okay.
Yeah.
It will sit on the other side as revenue. And then now we paid which is the expenses. So in short, this last column is a profit and loss account. Check here, we have the profit and loss account, the last one.
Yeah, basically it's your
so from
and other things.
Yes.
And your expenses.
Right. So now expenses that were incurred, we paid for wages, we paid for other costs, we paid 23,000. That is what has been said. Now, this payment was in form of cash. We paid. These are not accrued expenses. Okay. They are not accrued.
Okay.
Which means we are not owing these. We have cleared using our cash account. That's why we deduct from our cash account the same value. Okay. The reason as to why we are deducting from our cash account is because we have paid. How does that sound?
Yeah, it makes sense. You have to remove it from your what you have collected. You have to pay it to your wages and your other costs.
Yes.
Makes sense. Yes.
Exactly.
Yes.
And so at the same time, this in the profit and loss account, it will carry a negative balance because we are deducting expenses from revenue. It is revenue minus the expense. So it is carrying the same negative balance. Then we have you understood these entries? Because we don't want you to memorize the entries. You
No,
should
no, I'm not
understand the
summarizing
reason why.
it. Yes.
Okay, great.
For that,
Sharp girl.
in the first chapter, like when they're just telling us to do general entries, like in the spreadsheet, I'm sure you've seen it in the first, second lectures, yeah?
Yes.
Yeah, so basically they teach us how to, like, that's basically the base of where you have to put under the assets or under the, like, you should know where it should go. You can't just put it anywhere, like
Exactly.
understand the transaction behind it.
And
Whether it's the assets decreasing,
exactly.
decreasing, ownership interest increasing. So yeah, it makes sense.
All right, great. So we go to the calculated annual depreciation now. There is that 12,000 depreciation that you have. You know that
Okay.
depreciation is it's an expense, isn't it?
Expense, yeah, definitely.
Yes, it's an expense. Yeah, we have not paid cash because I'm sure you understand this from the cash flow statement. You understand that in the cash flow, we add the depreciation. The reason why we add the depreciation back to the profit is because this is not indicating the flowing of cash. Depreciation is just some notional cost. It's not really the actual cost. It doesn't indicate the flow of cash. So that's why here we have not recorded this transaction under the cash because depreciation is not really money. We just keep it in mind, but yeah, we just believe that it exists. You're okay?
So your voice is cutting again.
Hello, are you fine?
Yes, sir. I'm saying it's
can you hear me? Okay. How is the sound now?
Yeah, it's fine. It's fine.
Okay. So this is what you have. It's an expense. That's why we pushed it as a negative balance because depreciation is an expense. That's what we learned from the profit and loss account. Then when you total, when you total all these, yeah, you can total from here, this plus that. Okay. You know that when you total the machine costs plus let me show you how you are totaling so that you're totaling that plus that.
Yeah, the asset column.
On the asset column, you add everything. So it's 80,000 plus 37,000 minus 12,000, which is the depreciation. That gives you 105. And on this side, we add the capital accumulated plus what? Plus the profit that has remained. Okay?
Yes.
Yeah, plus our profit that has remained. And what we get to have, we have to get the same figure, 105. Any question?
No, I'm good, sir.
Okay. Again,
So
we go to the next.
So is it the assets have to be equal to the ownership interest for you to know your answer is correct?
Exactly. This part has to equal that one.
And there's no liabilities in this transaction, yeah?
We don't have liabilities.
Okay.
Yes. So when you add the profit from the profit and loss statement plus the capital contribution, yeah, then you should have what we have. This should be equal to our assets. Okay?
Yes.
Now, you go to the second year and show the same transaction. Same way.
Same way, yes.
Now we start with the balance brought down, not the owner's contribution. No, we are not contributing anything this year now because it's the second year. We followed that the entries are a bit different. So just come with the amounts brought down or brought forward or brought down is still the same thing. The amounts brought forward at the start of the year for the machine cost, it was 80,000. This same one, like you just get this last line. Let me just show you. You're getting this last line.
Okay.
The one that you ended with. 80,000 for depreciation, that And the last figure on the owner's equity is what? 105. That's the
Yes.
total you start with. So that's what we call them, the balances or amounts brought forward from the previous period. So indicating that here you just have to copy everything, then you paste in the other column. Okay?
Okay.
And then from there now, collected cash from customers. We are collecting this amount every year. That is what the question has said. It is every year. In case the question, the examiner decides to be very interesting, he can indicate to you that this year, maybe the money that they are collecting was increasing by maybe 10% per year. Are you following the line of thinking? What
Yes,
if they
yes.
say that the money collected was increasing by 10% every year, which means that in year one, it will be the same 60,000. In year two, it will be 60,000, plus the 10% of 60,000, which is 60,000 times 10%. Okay.
6,000.
That will be the amount that you write here. In third year as well, the total is 6,000.
Yeah.
Yes, so it will be 66 what? Thousand. It would be 66,000 here.
Okay.
If you are given the info, that is such an information. And again, on the wages, if you are told that the expenses also increased or reduced, just pay attention to the question. It means you are reducing this one or increasing depending on the data that has been given. Accumulated depreciation, this is the straight line method. We're using straight line method, so it does not change. It remains the same. This is the
Yes.
message that we have been saying, right?
Okay.
Yeah. So we use the same depreciation because it's the same depreciation every year. And we have agreed that depreciation is what? It's an expense.
It's an expense, yes.
Yes, that's why we push it in the expense column. And then the totals, these are the totals. You just,
Add them again.
add them together. Yes, add them together. So if you see now that accumulated depreciation has increased to 24,000 because there is that one you got from the previous period, the
And
one
it
that was supposed to be
from this period as well.
Yes, you remember here there was supposed to be some depreciation, I said, but I said no, the asset has not yet depreciated because it's the first year. So now
Okay.
that's why you have to add this 12 plus this one, giving us 24 negative, of course. Yeah. Then cash now. How much is our cash? We are adding everything. The 37,000 plus 60,000 minus
23,000.
minus the expenses, giving us 74,000. And then the last column, you do the same. 60,000 minus 23,000 minus 12,000, giving us 25,000. Then you add these three, right?
Mm-hmm.
Add 80,000 plus 74,000 minus 24,000.
24,000. Okay, yes, we get 130,000.
Exactly. Then you go on the other end, 25,000 plus 105,000, that giving us 130,000.
Okay.
Is that right? Are you fine with the spreadsheet?
Yes. So basically the collected cash from customers paid for wages, it will be the same every year.
That is what the question has said. The
But
question
it
has
can
said,
change.
yes, the question can change. Let's see, let me just to contextualize this so that you may understand. Let me reread the question a bit so that you follow nicely now. The machine grinding company commenced business on 1st January 1 with a
Okay.
capital of 80,000 contributed by the owner. So the company immediately paid cash for a grinding machine costing 80,000.
Okay.
Yes. So it was estimated to have a useful life of 6 years, and at the end of the time was expected to have a residual or resale value of 80,000. Now, during each year of operation of the machine, The
Okay.
company collected the 60,000 in cash from customers. I repeat, during each year.
Each year. Okay, that's the keyword.
Mhm.
Each year.
That's the keyword, yeah. Each
Okay.
year. Okay. And he paid 23 of cash, yeah, each year. So if the question will be very clear anyways. So just understand, once the question is clear, it says that maybe they can specify that in year 1 they paid this much, in year 2 they paid this much, or they can say what's this, the payments were increasing by 10% every year, or maybe they can say the payments were increasing from second year by 10%, which means starting from second year it will start increasing, or maybe from third year, just like that. Pay attention to the question. Is that
Okay.
right?
All right.
Mhm. So that's why we have said it should not be understood as being same. It's only that in this question, it is in that case. Now, I've told you that these last figures, the last figures that you close with, they will be your balance brought down in the
Yeah.
other year, now the third year. So
Okay.
you have the same values. You've just, of course, in the last one, you just put the total. And then you continue again, cash collected from customers, paid the wages,
23.
plus what? Depreciation now.
Yes.
Depreciation is what? It's 24. It's 12, sorry. It's 12,000 because it's each year.
12, 36.
Yeah. And then you less expenses from this side, you have 25,000. Okay? And then you do the same, you do. So if it were going up to the fourth year, 5 years, you could have just continued. There are 6 years. You can continue just doing the same thing. Okay? But these are, they have just told us we do for only the first how many? 3 years. Is that
Okay.
right?
Yes, sir.
Okay.
Makes sense.
It makes sense now, right? Now we go to, let's go to the next part of the question. They said we needed also to prepare the what? The balance sheet. That's what the question said. Let me just come. The question B, prepare a statement of financial position, the balance sheet, at the year ended the third year, and an income statement. So you need two. You need
Two
an
balance.
income statement
Yeah.
and a balance sheet. So how is a balance sheet now drawn? We know that a balance sheet is drawn by saying assets equal to owner's interest plus liability.
Yes.
Yeah, exactly. So basically that is how it is done. So follow that equation and you will be fine. And so this is what is there. Just like the normal financial position that we did from the principles of accounting. You remember those days?
Balance sheet is easy. Just add up, like just put the non-current assets, current assets. If they are liabilities, put the current liabilities, non-current liabilities, and then
Exactly.
interest. Yeah.
So it is just that easy. Yeah, owner's interest. So now observe that in this case, we are using the format that we used. They never had any liabilities. So the liability part was 0. So therefore, the total assets shall equal the owner's interest. You get?
Yeah, and
So
the spreadsheet already gave us. First of all, you'll know whether your answer is right or wrong by looking at the spreadsheet.
exactly.
Yeah,
If
and
the
then
spreadsheet is not agreeing, then you
there's
have a
something.
problem.
Yeah.
Exactly.
And everything is
And so,
given. All you have to do is just put the numbers. That's it.
exactly. We have already calculated for that in the spreadsheet.
Yes.
So when we are coming up with the spreadsheet and the spreadsheet has already agreed, then we just come to put the numbers, accumulated depreciation at the third year. Then the net book value. Obviously, the net book value is the cost of the asset minus accumulated depreciation.
Yes, I wrote that down yesterday.
Yes. Then you have total non-current assets. And then you add all the current asset, which is cash, just the cash. In this case, we just have cash as total non-current assets. So you add this cash plus these non-current assets, giving us total what? Total assets equal 155,000. And then the owner's interest, just that last figure that we found, the owner's interest in that column for accumulated capital was 130 plus the net profit.
Okay.
The message that they are teaching here is that owner's interest is found by saying capital plus what? Plus net profit. You remember minus drawings. Do you remember that one?
Yes, yes,
Minus,
yes.
exactly. Now we don't have any drawings. So that's why it is like this. So this is owner's interest, all that.
So
So
we're finding the profit of the company while using depreciation is happening basically through depreciation.
Exactly.
Okay.
So you have the profit, you add it. Any question?
No, sir.
You okay?
Yes.
Then the income statement, which is very short, is what we have.
Yeah.
Our income statement, it is found by saying revenue minus costs minus expenses equal to what? To the profit. You remember, I'm just giving you that one for the normal one, the general one.
Yeah.
So in this case, we don't have costs, so it's just revenue minus expenses. Then you have what?
Yeah.
The net profit. So they just said our revenue,
Which is the ownership
60,000.
at the start of the year as well,
Exactly.
because that's the profit as well. So if you know that, you don't even have to calculate.
Yeah, you don't just need to.
Yeah.
So you less the expenses, that should also include yeah. You just have to include depreciation. Okay. Have to include the depreciation. Have to include depreciation because it's part of the expenses. And you less that, then you have the net profit. Is there any question?
No, sir.
If you can have such, can we have any challenge?
No, I think it's pretty straightforward. Because I'm pretty sure the teacher is going to ask for a balance sheet, for a balance sheet, income statement, and the statement of cash flow. These three things are definitely coming.
Mm-hmm.
And the analysis of the transactions and the events of a company. It might not be just specific to depreciation, but it might be like the general one. Plus, I think depreciation might not be, it might be there, but I think it will be, but it's something similar. This is going to be there, that's for sure.
Exactly. So we just have to pay
and it's also more of multiple choice. So this can even come as a multiple choice in a way.
Oh, the test is multiple choice.
Yes. 20 questions are multiple choice. Only one question at the end, he said, is going to be about spreadsheets and the financial positions and all that.
Oh, under spreadsheet, yes, we have the statement of financial position. Just these same things we are discussing.
Yeah, so I guess it's going to be a very...
So we need to exert much effort and you have to understand this properly. Yeah, these have to be understood properly. Then, okay, we continue then. Read question number 4B.
4B. Didn't we finish that?
No. Read 4B. We were reading 4A.
Okay. Oh, not the require. Okay. The machine grinding company sold the machine for 40,000 at the start of year 4 and replaced it with a new machine costing 100,000. The new machine had an estimated useful life of 8 years and an estimated residual value of 10,000. At the end of that period, use of the new machine led to a reduction of wages and running cost to a level of 13,000 a year.
Are you able to trace the changes that have occurred already?
Yeah, basically they sold the machine for 40,000 at the start of year 4, meaning after they finished year 3, they sold the machine, year 4,
Mm.
and then replaced it with a new machine. Basically, they sold the old one, bought a new one for 100,000, and then the new machine says it has a residual scrap value of $10,000 at the end of the period. So use of the machine led to a reduction of wages and running costs to a level of 13,000. So while using the new machine, the cost of basically this wages and the running costs reduced to 13,000 a year.
Yes, from
Expenses are
23,
reduced by 13,000 a year.
from where they were. Okay, thank you.
Yeah.
The reason why I want you to analyze the question, we want you to understand what is being asked, first of all, before you explain.
Yes.
Yeah, because understanding of the question is very, very critical, very important, and we need it.
Okay.
Part A.
Prepare a
What?
spreadsheet for year 4, analyzing the transactions and events of the company.
Exactly. Those same things you said. Analyzing the transactions and events of these events that have occurred in year number 4. Remember, this is just a continuation from where it ended. Do you remember the figures that we closed with
Yeah,
in year number 4? You remember total cost we had 80,000.
80,000, yes.
Accumulated depreciation was 36.
Yes.
Okay. Cash was amounting to 11,000. These figures are very, very important. Now let's go on and we go to the next period. So have you seen what has happened in year number 4? Exactly, almost the same thing that we did in year number 4. The balance is brought what? Forward.
Yes.
These are the same
From
figures.
year 3, it has been brought to year 4 now. The balances.
Exactly.
Okay.
Cash collected from the sale, it is what?
40,000.
40,000. That is the cash that has been collected from the sale of this machine.
Okay. And that will be
40,000.
revenue, yeah?
Yes.
Okay.
The same one will be revenue. Now we have sold the asset. This is how different it is. This is the sale of an asset. Previously, we used not to sell assets. You remember what used to happen? We never used to sell the assets. In the other years, the previous years, we didn't sell the asset.
Yes.
Yeah. So now it is very interesting to notice that we are selling the asset. And the value at which we are selling the asset is 40,000. So
Yeah,
we
and you
have
have that as cash, yeah. So it has been put as a revenue because that's what you are getting as cash.
yeah, are getting cash now.
Yeah.
Then at the same time, we removed the non-current asset at 80,000. So you deduct the cost.
The 80,000, yeah.
Remember I said that the non-current assets are always quoted at what? At cost.
Cost,
The
yeah.
cost value. Yes.
Uh-huh.
So you deduct the cost because you have removed the non-current asset. The
Okay.
accumulated depreciation is 36,000 from the previous period. It was 36,000, right?
Okay.
Mhm. Then when you add this depreciation, the depreciation of the asset that you have sold, plus as a positive value, of course, plus this the negative value of the cost that you have sold, or the asset that you have removed, you have a negative value of 44, right?
Yeah.
It's a loss. There is a loss here. How does the loss come about? Could you explain?
Hold on, 80 minus 36, yeah. I think the loss comes because first of all, you sold the machine, yeah?
Mhm.
And then at the same time, you're also accumulating the depreciation of the machine.
Yeah.
So if you like if you minus them together, yeah, at the same time, you are not getting anything back from that thing, from the machine, basically. You're not getting anything back. You're not getting anything from the depreciation, and you've also lost the machine at cost value.
Exactly.
So that's
So
why it's a
mhm.
loss. Unless if maybe I don't know, like maybe if your machine at cost would have been, let's say, sold at the same value. I mean, yeah, same value, even more. It would have been it would have been a profit, basically, a revenue,
it
maybe.
would it would have been a revenue, right? Yeah. So that's what is there. So you have to less the negative, because here we're lessing both the expenses and the losses.
Yeah.
So you less the value. Okay. Because one thing that we need to understand is that this asset,
Mhm.
okay, there is a note. Let me just read the note for you. At the start of year 4, right? The net book value of the machine to be sold was what? Was 44,000.
Mhm.
The net book value of the asset was 44,000. Okay, which is which was actually the cost of the machine minus the accumulated depreciation. The net book value, this one,
Yeah, that's the
the
net
cost
book.
of the machine plus the yes, plus the accumulated depreciation, it gave us the negative the net book value of what? 44,000. You get the point? Which means the cost was 44. That's the cost that we had. Now, after having this cost of 44,000, we decided to sell this asset for remember, let me show you. The cost of the machine is now 44,000 because the net book value is negative. Let me put a negative so that you understand. We have sold this asset at what? 40,000.
Okay.
Have you seen? So the cost of the machine that we have so far, the money that which is still outstanding, which we have not yet recovered, in short, the money that we have not yet recovered from this asset is 44,000. But we
Yes.
have sold it at what? 40,000,
Yes. So we have
giving us a loss of what? It is giving us a negative loss of a 4,000. Okay, 4,000 less the expected value. So that's why we say that what's this? The 44,000 is a loss. Why should it be a loss? It is because we are losing, okay? We are losing the money. Yeah.
all right.
Is that right?
Yeah.
Does that help a bit?
Yes, definitely.
So the net amount of 4,000, this one, is an under provision of depreciation in earlier years and is reported in the income statement as an increase in the depreciation charge. So that there is an under depreciation in the previous years. So what happens is that it's more like the depreciation that we charged for the previous years was too less. You get the point. The depreciation was too less. It was less. Remember, for depreciation, we just assign values, right?
Yes.
They are not the actual values per se. We are just the assigning values. Say, okay, let depreciation, I think, equal to this much. Okay, it will be 45%. It will be this much. There is no accounting reason to say, okay, this is the actual number. We can't prove that depreciation is correct. The figure for depreciation is correct.
It's
So
just
these are
like
just
your
estimates.
personal estimate.
Yeah, they are personal estimates. These are estimates. So therefore, if you underestimate you will have such a case like this one where you end up recording some losses. Okay?
Yes.
And now
Definitely.
there is the replacement of the new machine again, which is the new machine that we're buying at how much?
100,000.
We are using the cash. 100,000.
Yes.
Yeah, that's why we deduct the cash account. We're using the cash. We collect now cash from customers, 60 what? 60,000, isn't it?
Mhm.
It is our cash, part of our revenue, of course. Then we said that the expenses, for example, wages and others have what? They have reduced to 13,000. That is
Okay.
what we were told. So have you seen what I was saying, that they can change the question? You have to pay attention. They don't have to remain the same. Now they have reduced it to 13,000.
Mhm.
Right. And the accumulated depreciation now will have to change, because I have to calculate again the new depreciation for the new what? For the new machine.
Okay.
Let's calculate the depreciation of the new machine.
New machine. Basically, we do the same formula. What
Yes.
was okay? The machine was at 100,000.
Costs minus scrap value.
Plus minus scrap value divided by estimated
Exactly.
residual value.
Yes.
Sorry, no. Divided by the number of expected life, the year,
Yeah,
basically.
the expected life.
Yeah. So 100,000 minus the residual value was. So what was 10,000, yes.
10,000 was the residual value.
Divided by 8, which is 11,250.
Exactly. So that's where this value came from. I'm hoping
Okay.
that now you're now getting it.
Yes.
So yeah, that's our depreciation. Of course, I've said that depreciation is an expense, just like these other expenses. Then you tot up the positive values to be added, the negative ones. I said if it's in the parentheses like this, it means that the value is negative.
Yes.
You do the additions. Then finally, you can add these.
Okay.
The way how we did it previously.
Yeah.
Okay.
Let's calculate
Here
that.
they didn't write. They should have written 155 here,
Yeah.
and then you add. They should give you like that, and it does balance. Any question?
No, sir.
Basically, if you can have these, the last figures, then it becomes very easy to prepare the balance sheet and the income statement. Right. The statement of financial position, the balance sheet.
Mhm.
It's just like the cost 100,
I
the
see.
depreciation, of course, at the end of the year is that accumulated depreciation is that, then the net book value remains that, then you
Mhm.
add the non-current assets. Then the current assets are here, and you add them together. You add current assets
Okay.
plus the non-current assets.
And
Have this
then,
total.
yeah.
And the owner's interest plus the profit of the year. These
Yeah.
have to equal.
Okay, so the total assets and the profit of the year has to be the same in order for you to know that your thing is correct.
Not really the profit of the year, but the owner's interest.
Okay, the owner's interest. Okay.
Yes, so total assets.
Oh, sorry, not profit of the year, ownership interest. Sorry.
Mhm.
Yeah.
Is that right?
Yeah.
Mhm. So that is what is there. And now we have the income statement. Obvious as well is very easy. Your revenue that you collected, minus all the expenses, including the loss on disposal. You know that the loss on disposal is debited to the income statement as an expense. It's an expense, it's a loss to us. So
Okay.
all losses, yes, it's part of the expenses. It goes under expenses. But if we gain on the sale of a non-current asset, that is an other income. It falls under other incomes, right? It is
Okay.
credited in the income statement.
All right.
Those are the entries. That's how you make them. So if it's a loss, debit it. If we debit it, it means it's under expenses. Then if it's a gain, that is an other income. For that reason, it goes where? On the credit side, isn't it?
Yeah, all the incomes are credited and all the expenses are debited in the ledger.
Exactly. That is what we agreed.
Okay.
Net profit, therefore, it is equal to 31,750.
Yes.
Does my good friend have any question?
No, sir.